I'm Jim Cramer, and welcome to my world.
You need to get in the game.
Firms are going to go out of business, and he's nuts. They're nuts. They know nothing.
I always like to say there's a bull market somewhere, and I promise
Mad money. You can't afford to miss it.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain you, but to educate you, to teach you about how this stock market works. So call me at 1-800-743-CNBC. There has to be an office somewhere. The Department of Negative Storylines? A kind of a Bureau of Disinformation that issues press releases and strategy memos about how to spin things negatively. There has to be, right? Maybe some kind of pessimism think tank. Could it be the Doom and Gloom Foundation? Or perhaps it's the Coalition for a Lower Stock Market. It has to be. I mean, that's what I was thinking when the market opened up miserably this morning. Although once the rally got going this afternoon, Dow up 20 points, S&P advancing 0.2%, NASDAQ rising 0.2%. I figured that what happened is the guys at the Bureau of Disinformation, they must take a 3-martini lunch and fold down on the job in the afternoon. Or maybe, just maybe, they ran out of ammo! Today's late afternoon rally aside, this misdirection headquarters usually does a fabulous job on a daily basis, wherever the heck it happens to be located. Hey, maybe I should friend it on Facebook or something. Just consider the retail sales numbers that came out today. They got an enthusiastic reaction from the stocks, even as the overall market may have been stuck in neutral. Yet before these figures came out, the storyline, which had been drummed into our heads endlessly, was that a combination of awful weather, slowdown at the consumer level, perhaps related to higher prices at the pump, right? That would coalesce to kill sales. So what happens? We get terrific sales, much better than expected, for almost all the stores we know, including ones I've endlessly flogged here, TJX, Limited, Ross Stores, Costco. Some might even backed away from Nordstrom's and Gap. All totally solid. Maybe these retailers, like Miley Cyrus, who famously didn't get the memo about wearing stilettos in her seminal treatise, Party in the USA, didn't get the memo about how they were supposed to follow the negative script and screw up. How dare they do so well? You know what? I'm also sure that the Bureau worked overtime on a negative headline for when Estee Lauder reported, Lauder stinks up the joint. But the quarter was huge. The stock rallied 11, and they had to shelve that bit of worthless irony. You can see the same thing with the coverage of the ne'er-do-well European countries. Now, we were supposed to be so worried about the big bond auctions in places like Spain, Greece, Portugal, right? You know, well, we got a big one from Spain, allegedly at death's door last night. I got up at 3:30 a.m. to see the results because, as they say, the early bird gets the gusano. I wanted to see how terrible it would be. I guess on this one I had gotten the memo, or at least drunk the disinformation Kool-Aid. Whoops. Wouldn't you know it, the bond auction was fabulous. The rate the Spanish government had to borrow at was dramatically down from last month. The reporter still said, of course, the demand was tepid. But that's like saying that a restaurant was packed to the gills, but people weren't eating that much. Maybe Yogi Berra has gone back into financial reporting. Nobody goes to a Spanish bond auction anymore. They're too crowded. But the worst story from the United Federation of Short Sellers, the absolute worst, is this canard that we hear every minute about raw costs. The notion that we have to put every earnings report we're getting through the inflation prism, with the litmus test between who can pass the costs on and who can't, right? The thesis being that if a company can't pass its costs on, you should sell the stock. And if it can pass them on, then you still don't want to own the stock because it's just a matter of time before it catches up with the company. Heads, the bears win. Tails, you lose. Look, I am not oblivious to the commodity inflation story. Far from it. As I come out here every night and I recommend pretty much every natural resource stock there is out there. I am a huge bull on commodities, from agriculture, copper, coal, oil, along with the equipment and services it takes to get them out of the ground. And to be sure, there are companies that I don't like and haven't liked because they are hostage to rising fuel prices. Sell. Which is why historically I've shied away from the airline stocks. Something I'm reiterating right now.
The house of pain.
I'd sell them all. Still, this notion that raw costs are going to kill earnings is so central to the Department of Negative Storylines that you can't hear any good news over the sound of the spin, the cacophony. Any company that is bold enough to actually mention rising commodity costs, either in the conference call or in the press release, gets a Bureau of Disinformation shout-out as a sell. Oil service companies, steel companies, trucking companies, engine makers, all of them. But here's the big joke. With the exception of Whirlpool, which has trotted out, not once, not twice, but 3 times in today's Negative Street Journal. Check it out yourself, B1, B6, C5. You can't make this up. None of these other companies are really being hurt by rising costs. It makes me sometimes wonder whether Whirlpool's got bigger problems and is merely embracing the party line. Anyway, Whirlpool stock's back to even after it reported the quarter, so what? Meanwhile, companies that should have realistically been frightened by actual commodity price increases, companies like Hershey and Kellogg, have actually rallied hard, because they've been able to beat these raw costs with price increases, cost-cutting, and great execution. You would have been robbed of these gains for certain if you bought into the false heads the bears win, tails you lose, raw cost dichotomy. And here's the real rub. Commodity inflation represents a teeny tiny percent of the cost of goods and services made and sold in this country. The far more important worry, the real inflationary concern that would shake me, is labor cost inflation. Workers. Every day, though, we see that's non-existent. We have an abundant labor force looking for work. We have huge slack in the system, which is why Ben Bernanke's not letting up, despite all the chatter that he's causing these problems. We have terrific productivity to offset any possibility of the real inflation creeping back. In other words, don't have a lot to worry about on that front. The labor cost picture is so stark that even the Department of Negative Storylines doesn't trifle with it. The media just ignores it. Some sort of positive third rail, perhaps, that the pessimists can't spin or misinform people about? Too bad, because it would reveal them as true anti-stock fifth columnists, working against you and your money, as you know I think they are. Here's the bottom line. We're not getting the negative inflation memo, and neither is corporate America. But we're going to reveal the role that it plays. A role that I think is meant to scare people out of stocks and keep them in their fixed income chains. Cindy in Illinois. Cindy.
Jim, big Chicago blizzard booyah.
Oh, man, bad weather booyah right back at you.
I love your show. It gives us home gamers a chance to succeed, and for that, I thank you.
That's what I want. That's what I want. I want people to be able to stay in it, navigate it themselves, do it, have some dividends, stay diversified, pick up some income, pick up some growth. What's up?
Thank you. How does the Kinder Morgan IPO affect the limited partnership stock I already own, and should I sell my limited partnership shares for the IPO stock shares?
I think a lot of people are going to ask that question. We had Mr. Richard Kinder on when they were talking about doing it. Of course, it subsequently has been filed, and I think that the yield's going to be higher for the partnership, and you want to hold on to that. I don't think that the situation will be affected by that IPO. I wish we'd get Mr. Kinder on. I know that it's in registration, so it's going to be difficult, but I know he would never do anything to hurt that partnership. He has been really fabulous to people who watch this show. Let's go to Dan in California, please. Dan.
Hey, a grateful booyah from sunny Santa Monica, where it's 65 degrees and beautiful.
Oh, fantastic.
And how's by you?
Not exactly perfect. But then again, when I lived in Santa Monica, it was right in front of the Centinela, because the police never rousted me when I slept in my car there. So,
yeah.
It's not all done with fair weather. What's up?
You're famous for that. Bill Ackman is sitting on the board of J.C. Penney. And do you think he's going to handle the company the way this guy, Eddie Lampert, handles Sears and turn it into a REIT? And what would that mean for the stock? Is there a good trade there?
Well, Eddie, I know both these gentlemen. Eddie never really turned it into a real estate investment trust. He did sell off properties when the selling was good, and then subsequently hasn't done that well, but the stock's up big today. I think you have to think of JCPenney and Sears, no matter what these people try to do. It's really the economy at this point, and the economy's getting better, so neither one is that bad. Neither one is going to hurt you. I do like some of the retailers that are cheaper, better, but those are not going to hurt you, whether it's Ackman or whether it's Lampert. Let's go to Patrick in Wisconsin, please. Patrick.
Hi, Tim. Super booyah. Hey, I just called because I just sold Manitowoc on Tuesday. I had held on to it for about a year.
Well done.
I don't know if I just broke even on it because I bought it at $15.50 last April, and I got tired of holding on and sold it off a day after President Obama visited that city, Manitowoc.
Okay, right.
And now I don't know if I should buy it back or take the money invested in something like Ford, Alcoa, Nova Gold, whatever.
I like Alcoa much more than Manitowoc. Alcoa is a stock that my charitable trust, ActionAlertsPlus.com, owns. Stephanie Link, who's the research director now, she's sick of me saying that Alcoa is going to be the best performing stock in the Dow, but I really feel that way. So I take the proceeds to go to Alcoa. If Manitowoc pulls back to 15, we'll have to reconfigure. But understand, Manitowoc used to be worth 50, and it's a better company now at 18. So I wouldn't have told you to sell it, but now that you have, I like Alcoa more for 17. In the United States, the U.S., or in the USC, the United States of Cramer, we're not getting the negative inflation memo. And neither is corporate America, and neither should you. Mad Money, be right back.